In the world of finance, there's always been hunger, a quiet, relentless drive to make money. Not just some money, but as much as humanly possible. And in this universe of numbers and greed, a new kind of wolf has been rising. The days of the master salesman who has 10 corded phones and making buy and sell orders while digesting market sentiment as it gets to him are gone. A player that hides behind screens, algorithms, and layers of abstraction, yet moves markets at will. They go by many names, but the one that fits best is simply this: the market maker. If you ever search for what a market maker does, you'll probably find a long technical definition about liquidity provision and bid-ask spreads. But here's what you really need to know. They are the silent middlemen of modern capitalism. When you buy a stock, someone must instantly sell it. When you sell, someone must instantly buy. That someone is usually them. They make sure the game never stops. They don't gamble like traders. They facilitate the gamble. And in doing so, they take a cut every single time.
And so we architect the firm around this principle of we're in the research business. And the core of this business is research. It's good old-fashioned, whether it's stock picking or forecasting the weather to trade commodities. It's a research business first and foremost. And trading is simply how we monetize our research.
Well, how much money are these guys like Citadel making off of this? Like, do they care? Is it a lot for them or what?
It's billions.
The most famous of these wolves is Citadel Securities, founded by Ken Griffin. He built an empire so massive that today it's one of the largest market-making firms in the world, handling roughly 40% of all retail trading volume in the United States. Griffin himself? He's now worth more than $50 billion. For those who like Forbes fashion show style leaderboards and think of them as reflection of true financial standing, the firm Citadel Securities is private, and the aggregation on Forbes is based on the last funding round of the firm that valued it at $22 billion. If the company were to go public today, given the trading multiples, how much do you think the market would value this firm? $600? $700 billion? Kenny Boy Griffin owns 80% of the company. So do the math. His firm profits from volatility, from volume, from your clicks. Citadel doesn't care whether the market goes up or down. As long as people trade, they win. In 2024, Citadel Securities achieved a record $9.7 billion in full-year trading revenue and a record $4.2 billion in net income, more than doubling its 2023 net income. But Citadel is only one wolf in the pack. There's Jane Street, a quiet but powerful firm that trades everything: stocks, ETFs, bonds, even crypto. And in 2024, captured more than 10% of US equity market share. Then there's Renaissance Technologies, or Rentech, the secretive hedge fund behind the legendary Medallion Fund, founded by mathematician Jim Simons. For decades, Medallion averaged over 60% returns per year before fees. And remarkably, it thrived not only during bull markets, but in times of chaos. In the dot-com crash of 2000, it soared. During the 2008 financial crisis, it soared. In the COVID crash of 2020, it soared again. While others were panicking, Rentech's algorithms were feeding on volatility itself. That's how market makers make money both ways. When markets rise, they profit from activity. When markets fall, they profit from the panic. Another silent giant is XTX Markets, a London-based firm that quietly raked in over $1.3 billion in profits as wild price swings boosted trading volumes. Its founder and current head, Alex Gurko, a Russian-born mathematician, became the UK's largest taxpayer after handing the taxman $700 million in a single financial year. They call it providing liquidity, but in truth, volatility is their harvest. And yet, for all their power, few people outside finance even know these names. Have you ever heard of IMC Trading, 2 Sigma, Virtu Financial, Hudson River Trading? Probably not. But these firms execute billions of trades a day. They're the digital infrastructure of modern capitalism, faster than any human, more profitable than most nations, and far more secretive than any bank. In 2025, one of them, Jane Street, made global headlines. Not for a bold prediction, but for a scandal. India's market regulator, SEBI, accused Jane Street of a sinister trading scheme in the country's Bank Nifty index, claiming it manipulated prices by buying up bank stocks and dumping them later, while holding short positions in index options. The move allegedly earned them hundreds of millions in profit.
SEBI froze nearly $567 million of their funds. Jane Street denied wrongdoing, insisting it was legitimate arbitrage, but quietly deposited the money into escrow to resume trading while the case continued. And that's when the public realized something unsettling. Even the most secretive firms can shape the pulse of entire markets across continents. These wolves don't roar, they whisper in algorithms. They hide behind execution speeds measured in microseconds. Their influence doesn't come from speeches or fame, but from invisibility. They are the unseen architects of the financial world, the silent dealers, ensuring every market keeps moving, because movement means money. Whether you're investing through your phone or buying an index fund, chances are they're on the other side of your trade. The world once thought the wolves of Wall Street were the loud, reckless traders, the ones who partied, shouted, and scammed their way to fortune. But those were just the actors. The real wolves move in silence. They don't chase markets, they make them. And as the financial world becomes more digital, more automated, more abstract, their reach only grows.